We are going to look at your knowledge check B 1 to 7 record transactions. So we're going to record these transactions, calculate the ending balance for each account. An Excel template is in your Student Resource Center. I've actually uploaded some specialized working papers in both your lesson area and in your weekly assignment area. So when you open those working papers, let's take a look at those for a minute. It's going to look like this. It's going to be an Excel spreadsheet, and you can either print this out and handwrite the problem, or you can type right in the spreadsheet and upload that. And you can see down here at the bottom, there are two tabs. One says KC 1-7A, and one says KC 1-7B. Okay, so they're a little bit different. Now, when we look at our problem, we can see that each transaction here listed is going to deal with specific accounts. Okay. In a normal business, we are going to have what's called a chart of accounts, and we're going to pull the account names off of that chart of accounts. In this situation, they didn't give us one, but if we do look at that spreadsheet, it lists all of the accounts that we are going to need up here at the top. And actually, now that I look at this, this should say owner's equity, not stockholders' equity. Okay. I apologize for that. So our first transaction says Katherine Johnson invests $200,000 to open her new antique shop. Okay. So first step is we have to figure out which accounts this is going to affect. So I'm going to look at my Excel spreadsheet, and she's investing cash, so it's going to affect cash. And because it's an investment, it's also going to affect our capital account. Our capital is what keeps track of how much money the owner has in the business. Okay. So we learned in our PowerPoint slide about the accounting equation and how our assets always have to equal our liabilities and owner's equity. Right. Whatever you do to one side of the equation, you have to balance out on the other side. So we're receiving cash, and I forgot how much, $200,000. So I'm going to type in $200,000 here in the cash box. And like I said, this is also going to increase her equity because she's making an investment in the business. Okay. So $200,000 in each of those boxes. Letter B, the company pays $35,000 for inventory. Okay. Pays $35,000 for inventory. So we're paying cash, we're receiving inventory. Okay. So since we're paying cash, I'm going to stick a negative in front of that, $35,000. And we're receiving inventory, whoops, for 35,000. Oh my goodness, sorry about that. $35,000. Okay. Again, we paid cash for inventory. We only worked on the asset side of the equation, but because we added one, subtracted the same, it's still going to balance out. Okay. Number 3, the company purchases supplies on account for $650. Now, our big words right here say on account. We did not use cash. Okay, we purchased them on account. If we look at our Excel spreadsheet, we see that we have supplies. Okay, I don't know why I can't keep numbers in my head this evening. $650 in supplies. We purchase them on account, which means we now owe somebody money. It means we have not paid the bill, we owe them money. And our liabilities is what shows us how much money we owe. So since we put 650 over there, we're going to put 650 on that side as well. So we are increasing our accounts payable account by $650 to show that we now owe the company that much money. Number 4, on the first day of its operations, the company sells $1,850 of merchandise for cash. The cost of the merchandise sold is $775. Okay, so this one's going to have two different transactions. First of all, we sold merchandise for cash. Okay, so we've received that amount of cash. I apologize again, $1,850. So I'm going to put $1,850 in my cash. I've received $1,850 in cash. And this is also going to go my sales revenue to show that I sold $1,850 in cash. This also says the cost of merchandise sold is $775. So I purchased, does it tell us what kind of a company this is? Antique shop. So I purchased an antique, I don't know, dresser for $775. Okay. I then sold that dresser for $1,850. When I purchased that dresser for the 775, my inventory was increased by 775. Okay. So this 775 is part of this $35,000 up here on number 2. So we have to account to say that we've sold this inventory. We no longer have that $775 in our inventory. So we're going to come to our inventory account and subtract the 775 from there. And we're going to show that our cost of goods sold is 775. Now, cost of goods sold is treated like an expense. Okay, so we're going to subtract our 775 from that account as well. Okay. So again, two different sides of this transaction. First, we received cash for our sales revenue, and we have sold $775 worth of merchandise. So we subtract it from inventory and our cost of goods sold. Our next one, the company pays off the full amount owed for the previously purchased supplies. Okay. If we remember number 3, we purchased supplies on account for $650. In number 5, we're paying that bill of $650. So since we're paying the bill, we're going to subtract it from our cash account. And since we no longer owe them that $650, we're also going to subtract it from our accounts payable to show that we have paid that bill. Here we incurred the charge, here we paid the charge. Okay. Number 6, the company pays $110 for telephone expenses. Right? We paid $110, so we know we have to subtract it from cash. And it was for telephone expenses. And if we look at our expense accounts over here, we have one listed as telephone. So again, an expense is going to decrease our capital. So we're going to put a little negative sign before that one. So we just paid the telephone bill. Number 7 is similar to number 4. On the second day of operations, we sold $2,300 merchandise for cash. The cost is $1,115. Okay. So again, we received, I don't know why, $2,300 in cash. So $2,300, and our sales revenue is also going to increase by $2,300. We have to remove the cost of goods sold amount from our inventory, which was $1,115. We want a negative sign in front of that one. And our cost of goods sold over here is going to be negative $1,115. I'm putting the commas in. If you want to work with numbers without commas, that's fine. Sometimes I feel like in my brain it makes more sense that way. Helps me keep track of my zeros at the end. Number 8, the company sells $6,200 in merchandise to a local business on account. There is that word again, on account. We sold merchandise on account. Now, up here, when we had that word, we purchased supplies. Here we sold merchandise. So when we purchase something on account, we're doing accounts payable because we owe somebody money. When we sell something on account, we're going to use something called accounts receivable. Accounts receivable keeps track of who owes us money. Okay. Again, accounts payable is when we owe someone money. Accounts receivable is when someone owes us money. It's an asset. It's something we own. Okay. We own that money even if we don't have it on hand. So they sold $6,200 in merchandise. So our accounts receivable goes up by $6,200 to show that someone somewhere owes us $6,200. Our sales revenue is also goes up by $6,200. But again, a two-sided entry because every sales entry is two-sided. The cost of the merchandise sold is $4,000. So, excuse me, our inventory is negative $4,000. And our cost of goods sold is negative 4,000. Whoops, that should be on the line above it. Okay, so again, that one is one of those two-sided entries. Number 9, the company pays $1,250 for employee wages. Pays $1,250 for employee wages. So we paid. So we're going to subtract $1,250 in cash. If we look across our headings here at the top, we have one all the way over here on the right called wages expense. It is an expense, so again, negative $1,250 because it's an expense that we're paying. Catherine withdraws $5,500 from the business. Okay, she withdrew $5,500. So we're going to have negative 5,500. She withdrew that money from the business, so we subtract it from cash and also over here in drawing. Okay, we're going to subtract it from drawing as well. Your drawing account is the account that shows us how much money the owner has taken out of the business for personal use. Okay. Step 11, based on the above transactions, determine the ending balance for each account. So we're just going to add up each one of these columns and put the answers down below. Okay. Don't forget, if you're using the Excel spreadsheet, the boxes are larger so that you can print them and write in them. So you're going to have to scroll up, okay, to see everything. Now I'm going to teach you a little bit of Excel along with the accounting in this. If you're doing this by hand, just grab a calculator and add up the columns. If you're doing this in Excel, I'm going to show you an equation that will do the addition for you. So every equation starts with the equal sign. We're adding, so we're going to do a sum. Whoops, and we're going to put the opening parenthesis. I'm simply going to click right here on this bottom number, hold down my mouse button, and drag it up to the top number and press enter. And it gives me the total of the cash column. So it's equaling sum of B4 to B13, and that's the cell name. So I'm in column B, box number 4, all the way to column B, box number 13. Okay. Now a quick and easy way to use Excel, down here in the bottom right hand corner, there's a little box, and if you put your mouse on it, it turns into a black plus sign. If I click on it, that's called a fill handle. And if I drag it all the way over the end, it automatically fills in all of the addition for every column. Okay, which I think is a cool little feature. Now the next thing I'm going to do is I want to make sure that my accounting equation is still balanced, that my assets really do equal my liabilities plus my owner's equity. So the first thing I'm going to do is I'm going to add up my total assets here, right here. So I have, and again, you can use Excel. We can go equals this cell plus this one plus this one plus this one, or you can use your sum feature that we just used. Okay, and then over here, I'm going to have my total liabilities and owner's equity. And this time I'm going to use the sum feature just to show you how it still does the same thing. I'm going to go from my liabilities over to my total owner's equity and press enter. And ta-da, 197,600, 197,600. So our assets do equal our liabilities and owner's equity, which is exactly how we wanted this to turn out. Okay. If you have any questions, please let me know. Feel free to rewind, slow down, whatever it is that you need to do for this project. Once you have this complete, keep moving through your class and you'll do something similar to the KC 1-7A in your textbook, or you can also find the same problem in your Canvas classroom. Again, if you have any questions, let me know. And don't forget, all of your assignments are due on Sunday nights. Have a great day.